Mistake number one is confusing two tests as one. So, one of the most significant errors taxpayers make is the misunderstanding that the qualification requirements for real estate professional status are actually two tests and not one test like they think. Many assume that meeting the 750-hour test alone is sufficient, but the IRS requires that we satisfy two different tests and they're distinct. The 750-hour test is where the taxpayer must spend more than 750 hours in real property, trade, or business during the tax year. These activities include real estate development, construction, acquisition, conversion, rentals, operations, management, leasing, and brokerage. I wanted to read that off for you because those are the 11. There are no other ones. The second test is the material participation test. In addition to the 750 hours, you also need to materially participate in the rental activity itself. This is not a one size fits all requirement. Material participation can be demonstrated through one of 7 tests outlined by the IRS, but for most taxpayers, the applicable tests are spending more than 500 hours on rental activities during the tax year or participating in at least 100 hours of the work done in the rental activity and more than anyone else. Failing to meet both of these tests leads to the classification of real estate activities as passive rather than active, which is what we want in the first place. The misunderstanding arises because the 750-hour rule applies broadly to all real estate trades and businesses, while the material participation test applies to each individual rental activity, unless the taxpayer elects to group them, which we will mention later as a single activity. Taxpayers also need to maintain detailed contemporaneous records to substantiate their hours, including logs of the time spent on the property management, tenant interactions, and other qualifying activities.